bottom line is near term, if we get 20% across the board tariffs, which is what the chit chat is today, who knows, that would be a tax on the US economy to the tune of minus 2% GDP. And so
Wow.
we currently, our base case for 2Q would be to plus 2% GDP. So this basically takes us down to stall speed. If there is retaliation, which there probably will be, you will probably have a negative second quarter, assuming they're put in place immediately. As we go through the year, what's going to happen is you're going to start to see the substitution effect, and you'll start to see the sting out of those price increases come down. And so, as you move into the back half of the year, maybe later in the back half of the year, inflationary pressures, the tax pressures from these tariffs starts to fade, inflation starts to fade. Second, you hopefully do then by also have the extension of the tax cuts. Again, these are not new tax cuts as of now. It's a full extension of tax cuts that are already in place, and it becomes more clear we are getting deregulation. So then in the back half of the year, maybe by the fourth quarter, could be potentially the third quarter, you see GDP start to reaccelerate.
Hmm.
And we could get pretty bullish on the economy as we end the year, something closer to 3%, assuming these tariffs don't result in a global negative massive
Mhm.
trade war. Why could we get more positive? Again, onshoring is a very, very big positive for the United States. We have a lot of productivity in this economy. AI is just going to make productivity even stronger. Deregulation is going to be a huge quote unquote tax relief for middle-sized companies. They've been squeezed dramatically from the surge in regulation over the past 4 years. Small, medium-sized companies create 80% of the jobs in this country. And so at the end of the day, again, you can see short-term pain for sure. Let's hope something doesn't crack as a result of this pain, i.e. what weak links crack usually do get hit. But as you move through the year, you can see prospects for a stronger economy, again, assuming this thing doesn't really turn into a massive global trade war.
Nancy, what are you modeling out for? What are some of our big trade partners, how they might respond here? It sounds like
Yeah.
Canada wants to take a tough stand here. We haven't heard too much out of Mexico. Europe, we're not sure. How do you model that out?
Yeah, that's very, very difficult to model out. I was just in Europe last week, and quite frankly, I was trying to think, what did I see that was American? No cars, so they can't put tariffs on cars. They already have high tariffs on cars, and so it's not clear what they're going to do. It probably will be targeted. I was just talking to my eco team about this. Probably will be targeted. They've already done motorcycles and some whiskey, and probably will continue to go down that path. But again, it's not clear how much of
Yeah.
that stuff they actually buy from the United States. I think the bigger
All
issues are
right.
what we're going to see out of some of China in particular.